Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson we looked at how many traders incorporate support or resistance into their strategy when placing their stops. In today's lesson we're going to expand on this concept by looking at how many traders will look for entry points which provide multiple levels of support or resistance in the direction of their stop, but few levels of support or resistance in the direction that they're trading. In addition to this, we're going to look at how many of the chart patterns which we've studied in previous lessons already incorporate this concept, providing traders with good potential areas to place their stops. So let's get started.
Okay, so as we learned about in our last lesson, when setting a stop, many traders will find a level of support if they're buying to enter a trade, or resistance if they are selling to enter a trade, and place their stop outside that level. When entering trades, many successful traders will also look for trades which have few, if any, levels of support or resistance in the direction that they're trading, but several levels of support or resistance in the direction in which they're placing their stop. So let's look at what I'm talking about here. We've got a chart of Starbucks, and we've got, once the market breaks through this support line here, there's nothing below that. If we were trading that back in May, that would have been completely white space below that, and you'd be in a situation where entering short there, you would have no levels of support to potentially hold the market up. So that's a pretty good situation there from a short entry standpoint. And from the stop side on this particular chart, you've got one level of resistance between your stop and your entry price, which is the break there of that support line, which then becomes resistance once it's broken. And then depending on where you place your stop, you've got potentially another couple of resistance points in between your stop and your entry price there. So this is the type of thing that we like to see. We like to see a lot of, when we're entering in a short trade, a lot of resistance points above and in between our stop and our entry, and very few, if any, support points in the direction that we're trading. In addition to this, many of the chart patterns that we've studied in previous lessons automatically have this concept of multiple support or resistance levels between the entry point and the stop already built into the pattern, and that's one of the reasons probably why they're popular. Hopefully if you've been through our lesson on head and shoulders, you recognize we've got a head and shoulders top pattern here. And as you can see here, you've got the entry on the neckline there, and that once that level is broken there, that support level is broken there, it becomes resistance. So you've got one one resistance point between your stop, which is placed above the right hand shoulder, and because of the nature of the pattern and because the stop is placed above the right hand shoulder, right hand not left hand there, then you've got another two resistance points in between that entry point, for a total of three resistance points naturally occurring at least in a head and shoulders pattern in between the stop and the entry price, if it's traded like we demonstrated in our lesson on head and shoulders, with the break of the neckline there and then the stop above the right shoulder. Okay. Many of the other chart patterns that we've studied have this sort of concept also built in. The ones that don't, however, or whatever strategy that you're using, if it doesn't automatically incorporate this concept of many support or resistance levels in between the entry price and stop, and few, if any, support or resistance levels in the direction that you're trading, you should try and sort of add that in, at least with an eyeball, to get an idea of the type of difficulty the market should have in reaching your stop, and the ease it might have to move in your direction and try and trade those patterns or whatever strategy it is accordingly. Okay. The purpose of the InformedTrades.com community is to hopefully put together a group of traders who are interested in learning together without all the hype that's associated with most trading education. So if you haven't done so already, I encourage you not only to visit the InformedTrades.com site, but every page on the site has a comment section, so I encourage you to actively participate by leaving your comments. That's our lesson for today. In tomorrow's lesson, we're going to look at another method that many traders use in their stop placement, which is using technical indicators to place stops. So we hope to see you in that lesson. As always, if you have any questions or comments, please feel free to leave them in the comments section below. And good luck with your trading.